We're continuing with our coverage from the Grand Cayman Liberty Forum, and joining me now is Amir Adnani. He's the CEO of Uranium Energy Corp and also a speaker here at the conference. Thank you so much for joining us, Amir.
Yeah, thanks for having me, Daniela.
So today we're going to be speaking about what the Financial Times has recently coined is the commodity to watch, uranium. And they said that it's one of the few bright spots right now in the commodity space. And really, it's, I was reading that it's enjoyed the largest weekly increase since 1996 and is currently trading at the highest level in 18 months, around, $42 a pound?
$42 a pound in the spot.
So let's talk about the new star of the commodity space.
New star of the commodity space. Well, to some extent, I think it needs a bit of perspective. We got to go back to almost 4 years ago when there was the Fukushima accident in Japan. So I think with that perspective, we realized that it's actually been 4 difficult years for the nuclear industry and for uranium prices. Uranium prices were at $72 per pound, coming all the way down almost 60% off, bottoming at around $28 per pound just basically this past summer. And we've seen the price rise now over the last 90 days from under $30 per pound to $42 per pound, which is now a 50% increase.
So on that note, let's look at the fundamentals that are driving the price, and how much of an impact are the recent sanctions we've seen imposed on Russia impacting prices?
Well, let's start with the supply side. 3.5 years of low uranium prices have meant that the supply side has basically received underinvestment. Mines have been shut down. There have been a number of supply side areas that basically make the supply side much thinner today than ever over the last 4 years. And to speak to Russia now for a second, one of the key supply sources for the last 20 years was the Russian HEU treaty. This was a treaty to dismantle Russian warheads, Soviet-era warheads. And this was supplying this was the single largest source of uranium in the market, which ended at basically around November 2013, so just a year ago. So you have all these supply side factors that have basically now gone out of the market, and demand finally is starting to pick up now for a number of reasons. Number one, the Japanese have had some good news, and it looks like 2015 will see more of a concerted effort on the part of the Japanese to restart reactors. So that side of the equation picks up on demand. You also have the fact that US utilities are in the market looking for uranium requirements 2 to 3 years out. And remember, if you're a buyer of uranium, you're not buying for next week's needs. You're buying 2 to 3 years out to make sure you have sufficient supplies to run the power plants. And the issues with the sanctions, the rising tension around sanctions has made it tougher to think about how to basically avoid potential sanctions. So all these things happening at the same time are giving the price almost a bit of a perfect storm around which we're seeing this really meaningful rise in the uranium price.
Well, I was reading that by 2020, some experts are expecting a huge shortfall.
Right. I think the shortfall is already in play, because when you look at demand of uranium right now, demand is at around 180 million pounds per year.
Okay.
Supply of uranium from mining operations is 150 million pounds per year. So to begin with, there's a supply deficit. The only difference is how to account for above ground inventories, which are typically government stockpiles. But when we talk about so much geopolitical issues and tension in the world and sanctions, then it's harder to fathom that secondary supplies or government stockpiles can play a consistent role in supplying the market. So we go back to that supply and balance.
So who has the 3 largest stockpiles right now in the world?
It's really the Russians. The Russians control the largest sort of stockpiles or government stockpiles of uranium. And again, hence the market fear right now around that being not the most reliable supply to kind of be hanging your hat on.
Right, and the uranium price comes out every Monday, so once weekly.
Well, yeah, so it's not the most visible, or it's a fairly opaque market. There are a couple of price publishing companies that publish a spot price either on a Friday afternoon, which is a company called Trade Tech, or Monday afternoon, another company called UX Consulting. So the market typically looks at these 2 prices. And just for the benefit of your audience, we know that last week's quoted spot price was $42 per pound. I would say, and my company, Uranium Energy, is a producer of uranium. We're in the market, so we've got a good understanding of what's going on. I'd be betting that this afternoon's uranium price will see another uptick. And in fact, we saw an uptick on the Friday numbers that came out by Trade Tech. So the visibility is not there for investors. But it's something that I think you will see there's going to continue to be interesting.
So Amir, this interests me because obviously I'm used to covering the metals, gold,
Right.
silver, platinum, palladium. So if an investor is interested in getting into uranium, how do you invest?
There really are just a handful of uranium companies that are listed that are producing uranium, that are in a position to offer that exposure. You also have a New York Stock Exchange listed ETF, symbol is URA, which has a basket of these uranium equities inside of it. You also have Uranium Participation Corp in Toronto that buys and stores physical uranium. Those are really the three ways. And this is really not meant to be a plug for what we're doing, but when you look at what Uranium Energy Corp has positioned itself, we are the only unhedged uranium producer in the world. So if someone basically believes that the spot uranium price and the uranium prices in general have a lot of catching up to do here, because you're not going to build new uranium mines for less than $80 per pound. If that's the view, then the only way to play an unhedged producer that can get the full upside to that uranium price is our company, Uranium Energy Corp. And our assets are in the US, so if the concerns of geopolitical end of things is one driver of concern, and the second is an investor really looking for that torque and upside, we fit both of those categories. And part of the reason why we're out communicating our story right now on a more broadly basis.
All right, Amir, well, finally, do you track gold? Do you invest in gold?
I do. I'm the chairman of a gold company called Brazil Resources, and so I definitely track gold, and I'm happy to see finally that something in the personal portfolio and the portfolio of all resource investors, being uranium, is creating a nice return for everyone.
So let's talk about gold for a second.
Sure.
What's your outlook on the metal?
This next sort of 30 to 60 days going into the end of the year, we definitely seem to actually have, if you had to put a gun to my head and say make a call, I would say gold prices are going back up. And when you look at sort of what's happening overall with the global issues around the monetary issues and fiscal policies or whatnot, sure, it's this US dollar rally and strength has definitely sort of dampened the mood, but everything is heading in the right direction in terms of creating the backdrop for higher gold prices on a longer term basis. Whether you look at the marginal cost of production for an ounce of gold, or whether you just look at sort of the overall sovereign issues and concerns out there with debt levels, we're going to have bumps along the way. But those bumps, although they could be painful and frustrating, we're definitely on the right course, not to mention going into the end of the year.
Awesome. Well, Amir, thank you so much for teaching me a little bit about uranium today. I appreciate you coming by.
It was a pleasure.
And thanks for watching our continuous coverage here from the Grand Cayman Liberty Forum. We'll have more guests for you throughout the next few days, so stay tuned. In the meantime, you can email us and newsfeedback@kitco.com. Thanks for watching.